Hello, everyone. Thank you for joining us for today's webcast, Direct Indexing, Accelerate Growth and Increase Personalization in 2024, sponsored by YourStake and First Affirmative Financial Network. Today's webcast will provide one CFP, one IWI, and one CFAC credit. If you have questions on credit, please give us a call via the number in the console. We welcome and encourage your questions. You can type your questions in the Q&A box, and we'll do our best to get to as many of your questions as possible. Materials, including today's presentation, have been made available for download from the Documents folder at the bottom of your screen. We appreciate your feedback. Please take a moment to take our brief survey that's also located at the bottom of your console. We will cover quite a bit of information during today's webcast. If at any point in time you're interested in scheduling a one-on-one meeting with YourStake, please click the blue Confirm button in the meeting request box on your screen. Lastly, in the event you missed any part of today's webcast or simply would like to watch it again, a replay will be made available, and all registrants will receive that information by email. With that, I am pleased to introduce our speakers today, Teresa Gusman, Chief Investment Officer at First Affirmative, and Robyn Wood, Vice President of Business Development at YourStake. I will now turn the webcast over to Teresa to begin the presentation. Welcome, Teresa. The floor is yours.
Thank you so much, Sarah, and good afternoon, everyone. We couldn't be more excited to speak with you today. Our discussion will focus on how you can accelerate growth and increase personalization with direct indexing in 2024. We'll begin with an introduction of First Affirmative and YourStake. Then we'll talk about the disruptive technologies and shifting investor expectations that will change and reshape the financial advisory business in the coming years. We'll move on to talking about how using direct indexing, you can accelerate growth and increase personalization. And finally, we'll talk about how you can get started using our values-aligned direct indexing solution in your platform. First, to talk a little bit about First Affirmative. At First Affirmative, our objective is singular. We produce and deliver outcome-oriented, sustainable investment solutions to meet your clients' individual financial and impact objectives. First Affirmative has been innovatively and authentically leading the way in sustainable, responsible, and impact investing for more than 30 years. To us, authentic SRI investing refers to a true commitment to incorporating environmental, social, and governance factors into investment solutions to deliver investment performance and make the world a better place. First Affirmative made this commitment more than 30 years ago, and all of us remain convinced that investors must take responsibility for the impact their money has in the world. This commitment is what drives us to seek out the latest technologies to enable your clients to achieve competitive financial returns and align their portfolios with their values. We enhanced our values-aligned direct index solution in 2023, and YourStake developed its exciting Advisor Core platform to help you accelerate growth and personalization. Now I'll turn over to Robyn, who will introduce YourStake.
Thanks, Teresa. Happy to be here, and thank you everyone for joining us. Just a little background on YourStake. We were founded in 2019 by Gabe Rissman and Patrick Reed, who I believe some of you have probably seen on prior presentations. YourStake serves over 250 advisor firms to include some of the top RIAs and broker-dealers across the wealth management industry, as well as asset managers and TAMPs. We are SOC 2 Type 2 certified, and we're very proud to be a top-rated tool according to this customer satisfaction by T3, or the insider information, 3 years in a row now. We have 3 solutions to deliver personalization to clients in different ways. First, our Values Hub was the initial set of tools that we created for advisors and asset managers. These tools screen, report, and help to build portfolios to align with a client's values or a theme of a model portfolio. Included in this suite are a couple of questionnaires that can be used to help identify what a client's values are. There's no right or wrong answers and no judgment. And we'll see a little bit of that later during the demo during this presentation. Our newest suite of tools within Advisor Core allows an advisor to upload a brokerage statement PDF. And with that one input, we deliver 3 outputs. The first being those holdings on that PDF statement are extracted and turned into an Excel file that can then be used anywhere else. We do provide an overview analysis of the portfolio compared to a benchmark or another portfolio, maybe a model portfolio. And advisors can chat with this application to glean additional information. And the third output is the analysis can be turned into a presentation that can be used with clients as well. Our third direct indexing offering with First Affirmative is what Teresa and I will be diving into today. And with that, I'll turn it back over to Sarah.
Great, thank you. Yeah, before we move into our next section, we would like to do a poll question, and we'd appreciate your participation. So that first question is, what is your primary objective for 2024? And the options are retain existing clients, grow assets, or improve operating efficiency. You can select your answer by clicking directly on the screen and then pressing submit. While we wait for the results, I want to remind you that we will take questions from the audience at the end of the presentation. You can type your questions in the Q&A box, and we'll do our best to get to as many of your questions as possible. All right, so that question again is, what is your primary objective for 2024? And the options are A, retain existing clients, B, grow assets, or C, improve operating efficiency. All right, so we'll just give a couple more seconds so that everyone can submit their answers. Okay, looks like we've got a pretty good turnout. Okay, so it looks like grow assets is definitely the top. So let's move on to the next question. We have one more poll question. So that question is, did you spend as much time as you hoped meeting with existing clients and prospects, i.e. business development and retention in 2023? And the options are yes or no. And just as a reminder, in the event you missed any part of today's webcast or simply would like to watch, a replay will be made available, and I'll register so we see that information by email when it's ready. Okay, so that question again is, did you spend as much time as you hoped meeting with existing clients and prospects in 2023? So the options are A, yes, or B, no. So we'll just give it a couple more seconds before we share those results. All right, looks like we've gotten a good turnout, so let's see what we've got. All right, so yeah, it looks like the majority are saying no. So hopefully we can find ways to do that in 2024. So with that, I will turn it back to Teresa to continue the presentation.
Excellent. Thank you so much, Sarah, and thank you all for responding to our questions. We did try to keep them very simple. And I'm going to admit that your responses are not surprising. Most advisors state that their key objectives are to grow and retain assets, as all of you did. However, as shown in this chart and in the responses to the questions, the typical financial advisor spends just over 1/3 of their time meeting with existing clients and new prospects. By comparison, back office tasks absorb more than 45% of an advisor's time. These tasks include meeting preparation, client service-related items, financial planning and analysis, administrative tasks, and investments. Our cutting edge technology can help you reduce the time you spend on back office tasks, give clients the customization and attention they deserve, and increase the productivity of your face-to-face meetings. And this is very important because in 2023, PwC, formerly PricewaterhouseCoopers, published a global asset and wealth management survey, along with 2027 projections. And this was published over last summer. This year's survey revealed how shifting investor expectations will disrupt the status quo. According to PwC, for industry players, the choice is simple. Adapt to the new context or fail. Nearly 90% of institutional investors surveyed by PwC believe the use of disruptive technologies will lead to better outcomes and returns from their portfolios. Despite the widespread investment in and deployment of these technologies, this is the area of investor expectations that asset managers and advisors continue to find the most challenging. Let's start with the premise that for you and for all of us and our clients, failure is not an option. So we continue to adapt. We know the adoption of disruptive technologies can be scary. Today we'll share how First Affirmative and YourStake have expanded our relationship and used our combined expertise and state-of-the-art technology to enable you to adopt the latest technology to seamlessly meet the challenges ahead. It's imperative that we all adapt because shifting client expectations are, in fact, disrupting the status quo. Gen Y and Gen Z grew up with Starbucks and IKEA, for example. The IKEA effect describes a cognitive bias that happens when people put in some form of labor to complete a project or finish a creation. It refers to the fact that people tend to place a higher value on things they create themselves. They receive boxes and build their own furniture rather than paying retail for already constructed pieces. And wow, are they proud of the furniture they built. Many in Gen Y and Gen Z are also fond of ordering things like a Starbucks extra hot, venti, no foam soy latte with 2 pumps of sugar-free vanilla and a sprinkle of cinnamon with their name on the cup, of course. In fact, more than 60% of all Starbucks orders are customized to the individual customer. It's hard to imagine this group investing in anything less than a personalized direct index portfolio with the help of their financial advisor. Why shouldn't they be able to eliminate fossil fuel, opioid, tobacco, predatory lending, and prison exposure? Why shouldn't they be able to reduce their exposure to air pollution in minority communities, bribery, corruption, and fraud, and environmental violations, and increase their exposure to best workplaces for women and clean energy companies? Of course, they also want to achieve their financial goals, work with their advisor to build it themselves, simply and efficiently, and full transparency to ensure the portfolio is doing what they want it to do from both the financial and impact perspectives, and they want it now. At First Affirmative and YourStake, we've worked together to build Vetus, and YourStake has built Advisor Core with precisely this client in mind. Our easy-to-use, AI-powered, state-of-the-art technology will enable you to reduce the time you spend on operations tasks and deliver personalized financial and impact performance, higher quality portfolios, unrivaled values-driven customization, and full transparency in both inputs and output to your clients more quickly with better analysis. Today, we'll do a deep dive into Vetus, our values-aligned direct index solution. If you'd like to see a full demo of YourStake's AI-driven Advisor Core technology at work, please let us know by clicking the button that will bring you to the demo. Before we get into a demo of our new and improved Vetus technology, I'll share a few insights into direct indexing. For those of you who are not familiar with direct indexing, we've put together a short Q&A. First, what is direct indexing? Direct indexing attempts to replicate the performance of an index by purchasing the underlying individual equities instead of using an ETF or mutual fund in an investor's portfolio. Values-aligned direct indexes are customized and personalized based on an investor's financial circumstances, tax considerations, and impact preferences, and can be adjusted as the investor's circumstances change. Second question, does this mean my client has to own every stock in the index? Absolutely not. Using the sophisticated Northfield Optimizer on the Orion Astro platform, we can replicate the performance of an index, custom benchmark, or model with a subset of securities and incorporate client-specific impact preferences, tax and transition considerations. We offer values-aligned direct index solutions across 7 risk levels, ranging from more aggressive or 100% equity to more conservative or 30% equity. And finally, is direct indexing new? Again, no. Direct indexing has been around for decades. In fact, I initially began using an early version of the Northfield Optimizer, which we currently use to construct our Vetus portfolios back in the mid-1990s. However, historically, direct index solutions have been reserved for ultra high net worth individuals and institutional investors. Now, technology advances, including zero commission, fractional share trading, automated account opening, and the availability of sophisticated optimizers on broad technology platforms have made inexpensive, values-aligned direct index solutions accessible to a broader range of clients. This means First Affirmative and YourStake, working with our partners at Apex and Orion, can offer direct index solutions to investors with as little as $25,000 to invest. This chart from PwC shows direct indexing AUM globally. As you can see, assets grew 29.1% from $100 billion in 2015 to $462 billion in 2021. And according to PwC, direct index assets are set to triple, rising to $1.5 trillion by 2027. This growth is driven by that combination of technology advances and this rapid move toward personalization. Each bar in this chart shows the projected growth rate for the 5 years beginning 2021. From left to right, mutual fund AUM are slated to grow around 3%. SMAs, 10%, ETFs 11%, and direct indexing is slated to grow 21% per year over the next 5 years. Technology is definitely playing a role in the transition to direct index solutions. However, the key driver is customization, both in terms of holdings and tax and transition management. This chart is from a Cerulli study on direct indexing. It shows the tax efficiency and customization available across currently available retail asset management solutions. These are essentially the choices we as fiduciaries have for our clients. Our choices are mutual funds, ETFs, models, and direct indexing. As we move from mutual funds toward direct indexing, customization and tax and transition management opportunities increase. Whereas you get what you get when you invest in a mutual fund or ETF, personalization and tax and transition management are the key benefits of direct indexing. Custom direct indexing can also accommodate individual impact preferences, leverage security and sector restrictions, and integrate legacy holdings. It can also enable your clients to capitalize on tax loss harvesting opportunities. Of course, different direct index providers have significantly different customization options and generally charge higher fees as customization options increase. As we'll discuss later, we do not increase our fees as customization increases, and our customization is available to all clients, as Robyn will show you. I pulled these charts from Michael Kitz's excellent report on direct indexing. First Affirmative and YourStake can deliver tax-focused, personalized, and customized direct index solutions. This puts us at the very center of direct indexing platforms. Our values-aligned direct index solution incorporates the most sophisticated ESG research, impact preferences, and portfolio construction technology available today. We deliver truly customized portfolios at low cost and with no platform minimum. And with Apex's fractional share trading capability, our minimums are well below our competitors. Which brings us to Vetus. Our values-aligned direct index solution is a revolutionary integration of SRI thought leadership, trusted and personal financial advice, and scalability empowered by technology. Vetus combines you, the advisor's trusted advice, First Affirmative's intellectual capital, investment philosophy, and 135 years of combined SRI and investment experience, and YourStake's cutting-edge technology, data, and analytics. Vetus automates client financial and impact assessment, account opening, portfolio construction and implementation, and reporting. And it can be offered to clients with as little as $25,000 to invest at a fee of 36 basis points. Now I'll turn to Robyn, who will demonstrate the Vetus workflow. Robyn?
Thanks for that, Teresa. Appreciate it. As Teresa mentioned, we're going to go through the Vetus workflow. You're going to start in the YourStake application, and we'll get that screen share going. Okay, everyone should be able to see my screen now. So before we jump into the keystrokes of this, I just want to kind of set the story or set the stage with a little bit of a story. So let's pretend that I'm the advisor in this use case. So I'm an advisor. I've just met my prospect. We'll name them Pat Prospect. They've been investing for the past couple decades. They expressed a desire to align their investments with their values, and they had assumed that their portfolio, which was being managed elsewhere, was aligned to their values. But after reviewing their most recent brokerage statement, just want to see if they can do better. So I've offered to review their current portfolio and ask Pat what their values are. Is that more human rights, environmental stewardship, maybe it's religion, or are there any activities that you want to avoid in the portfolio or to incorporate into the investment portfolio? Pat responded with sharing their current statement with me and said that they were hoping I could help them identify what their values preferences are. Because they invest in companies that are good to the planet and people, but they're not exactly sure what they want to do from there. So not being an investment manager myself, and I know that there's some good funds out there for many different values, but for this specific client, they really want to be dialed in. So a stock portfolio seems like the route to go. I let the client know that I'm confident I can help them identify their values and incorporate those values into their investment portfolio. So to discover Pat's values, together, we'll take the YourStake Behavioral Values Questionnaire, as it's non-judgmental, there's no right or wrong answers, but it really helps to identify what the individual cares about, not just for myself as the advisor, but also for the individual as well. So coming into YourStake, and now is where we kind of put in all of the information. So starting a new journey, I've just got to put some basic information in. And starting the approximate primary account value. And then choosing the appropriate custodian. There are 3 to choose from. As Teresa mentioned earlier, for accounts that are 25,000 to 250,000, we've got these little nice sort of guidelines here. I'm going to choose Schwab on this one. And then the account registration type, just going to choose as individual. All of this information that we're going to collect here will be important at the end, and you'll see why. So taking the behavioral values questionnaire. I won't go through this entire questionnaire. just because it is 16 questions long, but I do want to show a few of the questions just so you can get a flavor of what the questions, kind of how they read, how they're constructed. This questionnaire is really great for increasing dialogue with your prospect or your client as well. A lot of times during this sort of survey or taking the questionnaire, you'll find some little nuggets of additional information about the prospect or the client, and that's just kind of an added bonus. So this first question, I go out of my way to reduce environmental footprint, and Pat has said that they strongly agree. Companies should pay workers a living wage, and even if that means employing fewer people, they agree with that as well. Human lives are more important than animal lives. They'll be neutral on that one, though they've got several dogs. They'll just stay neutral. I go out of my way to avoid products linked to forced labor, i.e. sweatshops. They admit that they could maybe do a little bit better, but generally they agree with that. Prisons effectively deter crime. They disagree. So we've seen a few of these different questions kind of and how you can answer them. And YourStake is doing some mapping on the back end. So depending on how the client answers this questionnaire, they will then be matched to one of several, or if not more, personas that we at YourStake have pre-created. So going back to just kind of go through that workflow, we'll say that this client had matched to our Planet Protector category, our Women in Power Work category, and Racial Equity Advocate, just based on the way that they answered those 16 questions. So from that, we may want to view or review if there's anything else that can or should be incorporated into the portfolio. How can we get even more specific, or how can we fine tune these values? So clicking on fine tune, now me as the advisor can see there's a lot more issues out there that may be more appropriate for this particular client. And I can go through and look at all of the different categories that YourStake offers in terms of what kind of metrics or what values can I choose to include in this client's value set. So maybe we want to grab a couple in the health category, or more in the environmental category, or the environmental equal opportunity categories as well. So I've added a couple more. Then we can save this value set, and now they have a custom value set. So they care about 22 specific metrics or 22 issues that are really important to them. If I need to include or exclude specific companies, we just enter those ticker symbols in there. And that could be for a number of reasons, whether they just don't want the company represented in their portfolio, or maybe they already own a lot of it. So you can input those ticker symbols down here. And now going to the next page, we can select the appropriate benchmark of risk. And this is where you can do a couple of things. You could take the Orion Risk Intelligence questionnaire, and once they've completed that, you'll come back into the YourStake site and select the appropriate benchmark here. Now, with this particular prospect, just through organic conversation and maybe my own risk tolerance discovery, they have landed on being somewhere in that moderately aggressive range. So I've selected that there. And then for the last step here, we can just review real quickly the client's information, if there were any specific exclusions or inclusions, the account size, the registration, and of course, their custom value set. And now I just submit it. And this All of that information that we collected in these 4 steps gets transmitted to First Affirmative, and they'll utilize all of that information when they start building the customized portfolio. I do have one final step, and that is Pat Prospect had sent me their current brokerage statement for review. So what I have done utilizing the YourStake portfolio and sort of analysis and proposal tool is I've uploaded their PDF, and I've now got a spreadsheet of those holdings that I can use elsewhere. I've got a general sort of breakdown of what's going on in the portfolio, but most importantly, First Affirmative will now have all of this information. So they'll be able to take any tax transition or tax management into consideration as well as they construct the portfolio. As Teresa mentioned earlier, of course, if you want a full demo of this, please reach out to me. But lastly, before I hand this over to Teresa, you've now probably seen that the values identification, portfolio analysis have all happened in less than 20 minutes. Most of that time would have been spent with the prospect or the client, helping them to identify or learn what their values are. So what I as an advisor prefer to do, and what I, like many of you, didn't have quite as much time this year, would have liked to, spend that time with serving my current clients, or meeting with prospects. All I started with was this prospect's current brokerage PDF. We went through the questionnaire together to find their values. And now I have a really nice way to utilize Vetus to win this prospect faster. So Teresa, with that, I'm going to go ahead and send it back over to you so you can talk a little bit more about you and your team's sort of methodology or the process that you go through to create those customized portfolios.
Excellent. Thank you so much, Robyn. That was a great overview of the Vetus workflow. So after the portfolio is optimized, we deliver to each advisor an optimization report, a YourStake report, and a Morningstar report to review with their client. This allows the advisor to confirm that the portfolio reflects the financial and impact goals their client targeted prior to implementation. So to give you an idea of how the optimization and reporting processes worked for Pat Prospect, we began with the Vetus investment universe, which is built into the Vetus workflow, and that is comprised of 3,300 stocks. 22 YourStake screens chosen by the advisor and their client were applied based on the client questionnaire and the discussion Robyn had with Pat Prospect. This reduced the client-specific investment universe to 2,600 stocks, or removed 700 stocks from the overall investment universe. From that, we optimized the portfolio, and the optimization process in this case yielded a 229 stock portfolio. The Northfield optimizer, like most optimizers, looks to minimize tracking error. Here, the tracking error relative to the client's moderately aggressive benchmark is a low 1.33. To ensure the portfolio meets our standards and the expectations of the advisor and their clients, we deliver this plus 2 other reports for review. This report, or this chart, the bar chart, was taken from the YourStake Impact Performance Report. As you can see, this values-aligned direct index solution is 45% better than the benchmark in health, 74% better in environment, and 72% better in equal opportunity, precisely in line with the client's highest priority values. Importantly, with the information Robyn got from the client and loaded into Advisor Core, we were also able to compare the Vetus portfolio with the client's original portfolio. The Vetus portfolio looks significantly better from an impact perspective than the values-aligned portfolio built by one of our very, very large competitors. And the structural integrity of the Vetus portfolio is as good as or better than the client's original portfolio across all metrics. You already saw that the custom direct index solution has very low tracking error relative to its benchmark. Now we'll look at a few other metrics. The information on this page was drawn from a Morningstar report. The portfolio is well balanced geographically and from the size and style perspectives. The broad sector exposure is also in line with the benchmark, despite the number of exclusions. Before I open for question, I would like to cover one additional topic. In addition to delivering values-aligned portfolios, First Affirmative is deeply committed to proxy voting and corporate actions. Uh-oh. Why didn't that come up? Okay, there's supposed to be a chart here that shows First Affirmative. Here it is. Okay. So this chart shows why First Affirmative devotes its time and resources to proxy voting, or why we do what we do in proxy voting. And it's important because our largest competitors in the asset and wealth management business and in direct indexing do not vote proxies according to our and our clients' standards. In fact, BlackRock opposed 93% of environmental and social proposals globally in 2023. We view proxy voting and advocacy as the impact of ownership. We stand by the values we share with our clients and do the work to make a difference. We believe your share gives you a vote and a voice, and we make it easy for your vote to be counted and your voice to be heard. First Affirmative recognizes that socially and environmentally conscious investors have dual objectives. In addition to economic gain, our clients are concerned with good corporate governance, the ethical behavior of corporations, and the impact of corporate actions on a healthy society and the natural environment that it supports it. We also believe that companies implementing best practices on social, environmental, and governance issues enhance their ability to maximize shareholder value. Finally, we believe that companies that take actions contrary to best practices on ESG issues may contribute to systematic risks and associated costs that may adversely impact our clients' portfolio performance. Our 2023 proxy voting results are shown on the right side of this slide and are also detailed on our website. And our results stack up very well relative to our peers. In the spirit of full transparency, this chart shows how our proxy voting record stacks up against the average asset manager. I say asset manager because most financial advisors do not vote their own proxies. As you can see, First Affirmative supported 88% of climate and environmental issues versus an industry average of 21%, and 88% of social issues, again, relative to an industry average of 18%. So our proxy voting stacks up very well relative to peers. And circling back to the first slide I showed in this section, this is how First Affirmative stacks up relative to BlackRock on environmental, social, and governance issues. Thank you for the opportunity for us to introduce our values-aligned direct index solution. Vadis is part of the Latin phrase, quo vadis, where are you going? We invite you to join us on this journey as we remain at the cutting edge of technology to enable you to streamline your processes and your clients to achieve their personal, financial, and impact objectives. Please schedule a meeting with a member of our team to discuss how you can bring personalized direct indexing to your clients and accelerate growth in 2024. Sarah will take care of a few housekeeping items, and then Robyn and I would be happy to answer your questions. Sarah?
Great. Thanks so much, Teresa. So as a reminder, materials can be found in the documents folder at the bottom of your screen. We appreciate your feedback. Please take a moment to fill out our brief survey that's also located at the bottom of your console. Our speakers will be taking advisor questions. Please type your questions in the box under the media player window, and we'll get to as many of your questions as possible. In the event your question is not answered on today's webcast, a member of the YourStake team will reach out to you directly. If you would like to have a conversation that further discuss the ideas that were covered during today's event, please click the blue confirm button in the media request box on your screen. So with that, I would like to introduce Jack Cassidy, Director of Marketing at YourStake, who will be moderating the Q&A session. Over to you, Jack.
Thanks so much. Teresa, Robyn, great job. We got some really great questions coming in. To start out, when a client opens an account for $25,000, are you investing in stocks, ETFs, or mutual funds? For $100,000, does that change?
So the answer to the question is all of our portfolios invest in a combination of stocks, so straight equities, and fixed income mutual funds and ETFs. We do not invest in equity mutual funds or ETFs. Our Vadis process provides that information that leads to that part of the portfolio. And that is true, Jack, both for a $25,000 account and a $100,000 account. Both of those types of accounts would use fractional shares available on the Apex custodial platform, and that would allow us to build values-aligned portfolios for those clients that have very low tracking errors despite the size of the accounts.
That's great. And another question that just came in, what if a client simply wants to achieve tax loss harvesting with very little customization for personal values? Can you just do a moderate or small amount of personalization and still use data?
Absolutely. We can do, as Robyn said, we're not judging based on values. You can choose choose many different values to incorporate into your portfolio, or you can build a values aligned or an aligned direct index solution that is designed solely for tax management or transition purposes.
Kind of another layer to that, someone else asked if they could invest based on religious values.
Yes, absolutely. And because of the number and the varying types of metrics and data that we have, you can certainly align to someone's religious values. And then Teresa and her team will take those values into consideration as well when they build the portfolio.
That's great. And another one that just came in, can clients pick a mainstream benchmark to build off of, or do they have to do the risk and values assessment?
Good question. I think I can answer that. The values and risk sort of assessment questions. So for the values, yes, you could always take a look at what those YourStake value sets that we've pre-curated are, and if any of those align with what your client is trying to achieve in terms of their values alignment in their investment portfolio, you absolutely could just choose one of those. Or maybe there's simply the sort of example of, I want to avoid the fossil fuel industry, and that's it. That's the only value. That's fine. We've got a metric that covers that, and you can choose that. If they want to be even more dialed in terms of, I don't want to discount or leave out utility companies altogether. I maybe just want to avoid oil drilling companies. We have those metrics as well. Great question.
Another one here, how do you determine when to buy and sell individual stock holdings within the direct index portfolio?
So because this is not a stock picking portfolio, but a portfolio that is optimized to minimize tracking error relative to an index, we optimize all portfolios annually. We optimize tax-oriented portfolios as required and as discussed with the advisor. So that can be, daily, weekly, monthly, annually, depending on the advisor's preferences and their clients' preferences. And we optimize portfolios as significant amounts of cash come into the portfolio or leave the portfolio. So there are many reasons for an optimization, and that would change the composition of the portfolio. We're not saying, okay, company X has done this, and therefore we're buying or selling company X. That's not this process is much more quantitative than that. And the portfolio is based on a risk model that Northfield calls its everything everywhere risk model. And that risk model tends to allow us to build portfolios that are very well aligned with the index that we're using.
That's great. Kind of a further question on tax loss harvesting. How do you decide when to sell and where do the proceeds go?
So in terms of where to sell, that trigger point is one that can be determined by the advisor and their client. Obviously, if it's a fractional share portfolio, we're not going to be selling, to realize 2 cents worth of losses. It's got to be a meaningful amount relative to the size of the portfolio. So because the size of our portfolios vary so greatly, that would be determined on a portfolio by portfolio basis and working in conjunction with the advisor and their client. including things like, I only want to realize this amount in gains in 2024, or I want to realize this amount of losses in 2024 and not more than that. So these discussions happen between the advisor and their client, and then that information is communicated to First Affirmative, and we are building portfolios to meet that client's expectations. And Jack, I'm going to admit that I don't remember the second part of your question.
I think that covers very well, and that covered where do those proceeds go. Anything else there?
Oh, where do the proceeds? Okay, so the proceeds. So the buy list that we're creating is loaded into the optimization platform. So the stocks that would be chosen to replace the ones that are being sold would be on that buy list. So if you recall the funnel chart that I showed earlier, they would be included in the client-specific investment universe.
Great. And kind of pivoting over to proxy voting, does First Affirmative do any direct shareholder advocacy with companies?
Yes, absolutely. And that is one of the things that First Affirmative has done for a long time. We have a number of advocacy efforts that are underway. And for more information on those, I would urge you to reach out to us. Caitlin Mitchell, who is our coordinator of shareholder engagement, would be happy to speak with you about that. But we have some really exciting advocacy efforts underway this year. Well, for the 2024 proxy voting season, or for the 2024 season.
That's great. Another question, and I think we covered it earlier, but good to add the reminder. How often is the portfolio updated or VATIS rerun?
So we re-optimize our portfolios annually. And part of the reason for doing that, in addition to optimizing the portfolios on an annual basis to realign them with the benchmark, one of the things that we do is take another look and ask the advisor to ask their client to take another look at the values that are incorporated into the portfolio. And we update all our value screens at the time of that annual re-optimization. So if a company has come into or moved out of one of the lists that are incorporated, that company will either now be on the client-specific buy list or no longer be on that list.
Great. Looking through, still some coming in. Another question here, can you use direct indexing for IRAs?
Yes. Sorry, that was a really blunt answer, but that's the answer to the question.
Easy.
And one of the choices that you have when you go through the VATIS workflow is what the account type is. And that, allows us to see whether the account is taxable or tax deferred. And that will lead to the other series of questions on taxable accounts, obviously.
Of course. Another question here. Do you charge variable fees on levels of personalization or change it at account size?
No. The fee is 36 basis points, regardless of account size and regardless of customization. And the reason that we've done that is we believe that all investors deserve personalized portfolios. And those $25,000 investors that you're currently working with clearly have the potential to grow larger with you and also with us.
That's great. And to close out, we're just at the top of the hour. What's the right next step for an advisor to get started with VATIS?
I think the next step should be to schedule a demo. We have 3 people who can do, well, actually more than that, but several of us can do a demo for you. We can demo the Vetus workflow. We can demo Advisor Core. That would be the next step. And then you would sign a selling or sub-advisory agreement with First Affirmative, and we would walk you through that process. And you could get started very quickly moving client assets onto the Vetus platform.
That's great. And with that, Sarah, back to you to close out.
All right, wonderful. And a big thank you to all of our speakers today for such an informative discussion. As a reminder, materials have been made available for download, can be found in the documents folder at the bottom of your screen. We appreciate your feedback. Please take a moment to fill out our brief survey, also located at the bottom of the console. If you would like to have a conversation to further discuss the ideas that were covered during today's event, please click the blue confirm button in the media request box on your screen. Thank you so much for joining us, and enjoy the rest of your day.